what advice would you give to 16-year-old Cody, who maybe she's got $1,000 through mowing the lawn and through tutoring maths or something, and she's got $1,000 and she's like, I want to invest this $1,000. How would you approach that conversation with your younger self?
Well, I'll tell you what I tell my cousins now who are right about that age. So to my 16, 18-year-old cousins, I say, take the big risk now while you have no responsibility. The more responsibility you get, the scarier the risk becomes. When you have kids, when you have a mortgage, when you have a big paycheck that you could lose, it's scary to go start a business, to think about buying a business, to think about being the operator in a business. But when you're young, you should take all the risk humanly possible because failure doesn't really matter when you're young. I don't think you should take $1,000 and invest it in anything when you're young, unless you're investing it in yourself or you're investing it in a big risk, like trying to potentially turn $1,000 into a $100,000 business purchase. Interesting.
Okay. But not Bitcoin or NFTs.
Not Bitcoin. Okay. No. I mean, there's in investing, we say that those people are speculators, not investors. And there's a whole generation of people that have been taught speculation, not investing. Anytime you have the last man fallacy, which is that the person who comes in next that you're going to sell to is the dumb one that's going to be holding the bag, you should know that you should run away from that because you're the last man. We don't want to be a nation of people who are trying to kind of dupe people into being the next person to buy it at a higher valuation than we did. We want to have assets that are so good that you think like Warren Buffett and you want to hold them for 30 years. You have to pry that business out of my cold, dead hands because it's a great business. And I think because we had that fast money run of NFTs and Bitcoin and stocks, people get confused. And, the other thing that's so true is really good finance people who trade stocks have something called a black box. They don't even tell their salespeople that go and rep their product what's inside of their algorithms. It's firewalled. You can't see inside. Why? Because I would never tell somebody my unfair advantage that everybody else could go replicate immediately if trading is the way that I make money. So anybody that teaches trading online is totally full of it, in my opinion, because if they had great secrets, they would never share them. They'd just pile as much money as humanly possible into it and buy a bunch of Bentleys. And so I'm really cautious on speculators and I'm really bullish on ownership.
So how might said 16-year-old or said cousin actually invest that $1,000?
You invest it in yourself. I think you need to learn at that point. You have to learn, then you increase your earnings, then you invest. No 16-year-old should be taking their $1,000 and putting it in the S&P, in my opinion. They will make so much more money by taking that $1,000 and going and learning how to create a bunch of YouTube videos, or going and learning how to buy businesses, or going and learning how to talk to people and negotiate. Whatever the case may be, I would take the $1,000 and I would consider it your little MBA money. And I think spend like that until you can start you can do the S&P 500, putting 10% of your savings in. I've done that for a long, long time, but that won't make you rich. It'll just potentially beat inflation.
Hey friends, thank you so much for watching. If you enjoyed this clip, then click here for the full unedited episode. And if you like that, then do please consider subscribing to the channel. It means a lot. Thank you so much and have a great day. Bye-bye.